popular questions that we ever get asked on a daily basis. What are the closing costs on a VA loan?
So that's a multifaceted question, and yeah, the hard part is that you have so many people that are doing this job as a loan officer that some people use the same word to describe different things.
Sure.
So the simplest way to answer that is that you got to break it down. You have fees, and then you have non-fee items. So altogether, those are closing costs, technically. Some people will use that word, but fees will be your bank fees, appraisal, title fees, recording, transfer taxes, inspections, things like that, especially if you're doing a refinance, where if you weren't doing that refinance, you wouldn't be incurring them in the transaction. Now, you have other items that are part of closing, like interest that's going to be collected, escrows. Those are called prepaids.
Escrows meaning your property taxes and homeowners
Yes,
insurance.
yeah. So we're going to collect taxes and insurance, escrows on the new loan, and then your old lender, once they're paid off, will typically send a check back with the old escrow balance. And so we're going to collect the money, and then there's going to be a time gap until you get it back. So that's part of closing. It could be rolled into your loan or collected out of pocket. It could be considered a closing cost. But if you weren't doing the refinance, in this example, you'd still be paying those out of pocket with your normal payment. So
those are costs of home ownership, not necessarily costs of a mortgage transaction.
exactly. So that's why it's important to look at the fees that the lender's charging, and then estimating title fees. And again, we've mentioned this in a couple other videos. The rate is what the lender controls, and their fees. So those two are tied together.
So what are your lender costs on a typical VA purchase or refinance loan?
Our fees as a bank with Pulaski are zero. So we will charge a credit report, flood certification, a couple of small things, typically about $65 to $75. And then the appraisal is a third-party cost, but we don't charge any underwriting fees or origination fees as a standard. Now, if you wanted to buy the rate down, you could pay points. But as a standard, we don't charge any.
Or if you wanted to take our higher rate, you would pay some of those other costs for them.
Exactly. And that's something that's important to know as well, is that negative points is the terminology that actually means the lender is providing closing cost credits, because positive points means you're paying extra fees. Negative points, which no one probably uses that term, but it's very specific. Negative points means the lender is generating credits on the buyer or the borrower's behalf.
Great, thank you.